Hey, good afternoon. Tony Bruce, CPA, more than just an accountant. Back in the studio here. And we've been getting a lot of questions. We're right now just past the middle of December. And if you pay attention to the news, there's a whole budget battle going on for this reconciliation bill. But a lot of our clients, we were looking beyond the next 60, 40 days, 90 days. We were looking into the first 2.5 years of the new administration coming in. And what we're noticing and what we're talking about is that a lot of our small business owners, and even some of the larger small business owners, now know that there's some certainty, right? Now, we're not banking on taxes being lowered, but at the same time, we believe that the tax structure in terms of increases, decreases is going to stay the same. So, in other words, we're probably looking at a corporate tax rate of 21%. I don't know if it's going to go lower, but I think right now, 28% is out of the question. That was the other opinion of the other candidate running. Now, similarly, on a personal level, if you have a pass-through entity like an S corporation or an LLC that's a partnership and the like, we are seeing ourselves in a situation where your individual rates are going to be staying stable as well. Now, you're going to have a majority, right, for the president and the Republicans in terms of keeping that structure in place. And that's what we're seeing, at least until the midterm elections, probably definitely for the next 24 months, if not 36 months. And what that does is it gives everyone, more confidence, more certainty. I see small business owners now considering spending capital, whether it's for their rental properties, whether it's considering new equipment before year end or even early into next year. We're budgeting for greater capital expenditures in terms of expansion of business. We're concentrating and considering bringing on a new employee. We're looking at our benefits programs, retirement plans, and the like. So what we're doing, again, is being proactive, right? Certainly we're sitting here December 16th, 17th, 18th, 19th, the end of the year, and we're considering what's the final fourth quarter payment tax going to look like for January 15th, early next year. Generally, what we do is we gather all the pertinent data, and we've been doing that all along as our clients. And then we're having our year-end / fourth quarter meeting with them. And what we are doing is we are holding them accountable, right? We're talking about things that they should have done and things that they still have an opportunity to do. I told you last time we were going to talk about meals. Well, we know that entertainment expense is non-existent. We talked about vehicle, we talked about capital expenditures. But we also are talking about holiday events. And I should say today, in case I don't get a chance to see you, Merry Christmas, Happy Hanukkah, Happy Holidays, whatever holidays you celebrate. Certainly for me, Christmas is a big time, as well as the new year. But having said all that, what we're talking about is meals for company parties, right? And if the party is 100% the employees and even some of their intangibles like their spouse or partners, et cetera, there's an opportunity to deduct 100% of that meal. At a minimum, you're looking at 50%. Now, remember, we're not talking about your college bowl games this weekend, the tickets for that. Those are not going to be deductible. We're not talking about golf outings and things of that nature if you're in the warmer climates or you're traveling to a warmer climate for the holidays. We're not talking about the actual entertainment expense. We're talking about the meals themselves. If you have a DJ there, if you have certain other parts of the party going on, you have employee achievement awards. I was just at an event last week and I saw that they gave a key employee a pretty significant award, a recognition for the work that he has done since he's been brought on the last couple of years. So that's what we're talking about with meals. That's what we're talking about to capture, even with our small businesses, with our 1 and 2 member businesses. We're talking about what are the things we could be doing. Finally, last but not least, we're in bonus season, so we're helping folks clean up bonus. But all of this is about building up to reducing the tax bill legally, making sure you have more cash in your pocket. Certainly, as we said at the outset, we said that our business owners now have more confidence about what to expect. Now, they're not confident that the economy necessarily is going to be better or worse. What they're confident in is that the government and its regulations seem to be at a standstill in terms of the tax base. And it seems like we're going to have some loosening of regulations. So that gives more confidence for the business owners. And last but not least, we're looking at cash flow. How do we look at cash flow? Because we've done the things that we've done proactively throughout the year, we're now able to have a better idea of what the final tax liability is for our corporate businesses, for our partnerships, LLCs, for our small businesses, even on the individual level if you have a pass-through. We're able to do that. We're able to capitalize on that. And at the same time, by reducing that tax expense, we've improved our cash flow and retained more of that cash for our quarterly payments, and more specifically, the January 15th fourth quarter payment coming up. Of course, the payment happens in 2025 because it gives you a chance to clean up and have a better idea of what your profit will be or what your taxable income would be. But at the same time, those payments should have occurred throughout the year. So I hope that makes sense. First, second, third quarter. Remember, taxes are a hidden expense, and what we're doing with that expense is it's a form of inflation, if you will. It's an extra cost to the business that we're trying to minimize, along with all the other costs, energy costs and the like that you've experienced. So I hope that helps. We still have time to get together. Tony Bruce, CPA, more than just an accountant. And don't forget to like and subscribe. Take a look at this, pass this video along. If you have any comments or questions, put them down below and we'll try to help you out. Take care. Have a great day.